Hello traders, and welcome back to my channel. In today's video, we are going to take a look at the GBP USD pair and see how this pair is going to react to the upcoming news releases. As we all know, the Bank of England will be making its monetary policy announcement tomorrow, and the market reaction to it will likely cause high volatility in the GBP USD pair. In addition, other economic data releases from major economies may also spark price movement. So in today's video, I'll be showing you when to enter the market for potential GBP USD trades. But before we get into that, if this is your first time here, please consider subscribing for more trading insights. And if you enjoy the video, please hit the like button. So let's start with a quick overview of the current market situation. Currently, the GBP USD pair is consolidating near the 1.30 level after the previous session's sharp decline. The pair fell by more than 1% after the US Federal Reserve raised interest rates by 75 basis points, which was in line with market expectations. The Fed's hawkish stance helped the dollar to gain strength against most currencies. However, the GBP USD pair has managed to avoid further losses due to the upcoming Bank of England's meeting on Thursday. The market reaction to the BOS policy decision will likely cause volatility in the pair, and it's important to be prepared for potential price swings. Now, let's move on to the technical analysis. On the hourly time frame, we can see that the GBP USD pair is respecting the previous resistance level, turn support level at 1.30. This level has been a key support for the pair since the beginning of March, and it's now acting as a cushion against further declines. However, the pair is also facing resistance at the 50-hour moving average, which is currently at 1.30. The MACD indicator is also showing bearish momentum, suggesting that the downtrend may continue in the short term. Based on this analysis, we can expect the GBP USD pair to remain volatile in the near term. Here are three key levels to watch out for. The first level is the 1.2950 level, which is the swing low from the previous session. If the pair breaks below this level, it could indicate a further decline towards the 1.28 level. The second level is the 1.30 level, which is the previous resistance level, turned support level. If the pair holds above this level, it could suggest a potential rebound towards the 1.3150 level. The third level is the 50-hour moving average, which is currently at 1.30. If the pair breaks above this level, it could signal a move towards the 1.3150 level. In terms of trading strategies, here are three potential trades to consider. The first trade is a short position with a stop loss above the 1.30 level and a target at the 1.2950 level. This trade has a 1-to-1 risk-reward ratio and could be executed if the pair breaks below the 1.30 level. The second trade is a long position with a stop loss below the 1.2950 level and a target at the 1.3150 level. This trade also has a 1-to-1 risk-reward ratio and could be executed if the pair holds above the 1.30 level. The third trade is a short position with a stop loss above the 50-hour moving average and a target at the 1.30 level. This trade has a 1 to 1.5 risk-reward ratio and could be executed if the pair breaks above the 50-hour moving average. It's important to note that these are just potential trades and not financial advice. Traders should always do their own research and due diligence before entering any position. Moving on, let's analyze the fundamental outlook for the GBP USD pair. The main event this week is the Bank of England's monetary policy announcement on Thursday. The central bank is expected to raise interest rates by 25 basis points to 1% as inflation in the UK remains high. However, the BOL may adopt a more cautious approach due to the uncertain economic outlook caused by the war in Ukraine. The recent sell-off in the GBP USD pair suggests that the market is already pricing in a rate hike. Therefore, any surprises from the BO's announcement are likely to have a limited impact on the pair. In addition to the BO's meeting, other economic data releases may also influence the GBP USD pair. Today, the UK will publish its GDP data for February. The market expects a 0.1% month-to-month decline, which would indicate a slowdown in economic growth. A worse-than-expected reading could weigh on the pound. On Tuesday, the US will release its Consumer Confidence Index for April. A strong reading could boost the dollar and put downward pressure on the GBP USD pair. On Wednesday, the Eurozone will publish its inflation data for April. The market expects a 7.4% year-on-year increase, which would be the highest rate ever recorded. A better-than-expected reading could strengthen the euro and put upward pressure on the GBP USD pair. Overall, the short-term outlook for the GBP USD pair remains uncertain due to the upcoming economic data releases and the BOS monetary policy announcement. Traders should be prepared for potential volatility and consider using appropriate risk management techniques. Thank you for watching this video. If you enjoyed the content, please don't forget to subscribe, like this video, and share it with your friends. See you in the next one.